Good evening. This is Craig, Trailer Park Traders. Welcome. Doing another video because, well, gee, everyone else is, and oh my God, the markets are going crazy. I can't handle it. All right, let's start with some basics. Number one, let's talk about the Bitcoin cycles. Reset cycles are 547 days, and expansion cycles are 914 days, based off of what I'm seeing on this chart. There's obviously an expansion happening, and currently, we're in a reset phase, still in a reset phase, and that should end sometime around April of 2027 based off historical data. Now, we can get highly involved in other aspects to why it's resetting because we just naturally call it a Bitcoin cycle. It's really not a Bitcoin cycle. There's other factors at play on why we go up and why we go down. Okay. But before we do, let's look at another chart and kind of ask the question. Let's see here. Yeah, just ask the question. Here's the euro. Okay. What the hell does the euro have anything to do with anything with Bitcoin? Okay. So let's just do some simple understanding of why Bitcoin goes up and down. Credit drives Bitcoin. Liquidity drives high beta stocks. Okay, HYG, JNK, OAS. Look at those three things for credit. All right. What drives credit? The dollar. So when you have a strong dollar, you have weak credit. When you have a weak dollar, you've got strong credit, right? And what drives the dollar? Well, 57% of the dollar is driven by the euro. So when the euro's going up, guess what's coming down? And well, guess what's coming down? Guess what's going up? I know it's crazy. It's insane. It's insane. Why did I do that? Let me go. Hold on. Let me come back. There it is. And Bitcoin. Cool. Got that there. Save that. Get off that. Okay. Here I am. All right. So let's back up again. When the DXY is going up, HYG is coming down. What's driving DXY is the euro. 57% of our dollar is in an inverse relationship to DXY. So with Bassett, basically, I don't know if a lot of y'all know this, but Bassett used to work for George Soros. He's a little mentor of George Soros, who's a currency manipulator. He's been banned by Britain. Can't come back over here anymore because they almost destroyed the pound over there. From my understanding, I could be wrong, but that's my understanding of all this. So basically, Bassett now is in the Treasury, and he's like, "Well, can't spend any money. Let's just do a swap on euros and buy the yen to protect the yen carry trade because you need funding, and of course, you need credit for the markets to go round and round, especially high beta, or else we're all going to be in defensive stocks." So, so he took the euro, buying the yen, which, by the way, is driving up the price of the euro. Well, if the euro is going up, guess what's coming down? The XY. And I can bring it down to like the hourly. You can kind of see what's going on here. So let's look closer at this. You're in this downward spiral with the dollar, and Europe is in this major uptrend. You see it? Oh, I'm sorry. Yeah, it's in this major uptrend right here. And looky what happened. The euro hit resistance and the dollar hit support. So it's not going to take a rocket scientist to understand that the dollar is going to go up and the euro is coming down, which means credit, I'm sorry, euro's going up, DXY, I'm sorry, euro's coming down, DXY is going up, which will hurt credit. So looking at HYG on the weekly, just to see the trend, you're down. J and K, you're down. So I put the weekly trends over here on the 1472 just to show me what's up, what's down, what's happening, right? Because the prediction here, going back to Bitcoin, we'll say that. Let's go back to Bitcoin. The prediction here is that you're in a reset. This is the thesis, not financial advice. This is the thesis here that you're in a reset with Bitcoin. And every single time you're in a reset with Bitcoin, what happens? You get a reset in credit also. No, that's not true. It is true. And that's what we're waiting for right now. We haven't gotten that reset yet. Holy shit, you're right, Craig. I told you. Are we right on Trailer Park Traders? You got to reset here. You got to reset here. And now we're waiting for the Bitcoin credit reset right here. But it happened over here. Yeah, that was the pandemic. That was the scamdemic. So that was the one thing, and it doesn't invalidate the thesis. Once again, you're in a reset, you get a credit, you get a credit dump. Can you get a credit dump during a non during an expansion cycle on Bitcoin? Yes, but you're in an expansion cycle. It dumped and you went back up and you made new highs during that cycle. And you can get mini dumps or like small dumps, not many, not a lot, but I'm saying like tiny credit corrections, which will affect us. You can do a comparison with Tesla. It's the same thing. It's amazing. So I back up. Now we're discussing Bitcoin cycles, but should we really be calling it a Bitcoin cycle if it's the euro driving the dollar, which is driving credit at the end of the day that we need to be looking at? And I'm not trying to rain on anybody's parade. If you've made what 30% returns on Dogecoin or Bitcoin or whatever, congratulations. But what I'm trying to say is when you start looking at what's driving this thing, right? Let's just drop it down to the hourly again. And you see the euro, let's see the 4 hour. You see the euro getting rejected and coming down, which means the DXY is going to go up and that's got support at this point. You've got a long way to go on DXY. Now, Bassett's buying the Japanese yen. Moving on from all that, but you get it. That's my thesis on all this is that the dollar is not done going up, which means credit is not done going down, which means Bitcoin is not done going down. It's literally that simple, even though it doesn't sound that simple. All right, so the Japanese yen, JPY to USD. This is very interesting. I found this really interesting. So on the 30th, Bassett dumps a shitload of money on the yen via euros, by the way, because we just had them laying around someplace at the White House. And you see this huge pump. So this was the first tranche of money buying the yen via euros. Boom, right? This huge jump up from the 30th. came back down, bought again, right? But notice something on here is that he bought here and he bought here. Why why is the 30th so much larger than the 19th or 18th whenever you bought the second tranche? Simple. And I looked it up. There was a crap load of shorts, like 76,000 contracts of shorts down there at July 30th. They got squeezed. They were like OJ Simpson squeezed. And you didn't have that squeeze effect August 18th or 19th when he did the second tranche. There you go. The more concerning part of this is not just that it's not working, because the main goal here is to prevent Japan. Actually, the main goal is to protect the yen carry trade. The second goal of this is to not have them sell treasuries or the bonds. It's like $1 trillion, so they say. But this is the more worrisome part. If I just take the low and go up to the high, 50% of the effort, 50% of the effort has vanished on what they're trying to do, which is make the yen stronger. Why? Because their yields, just like our yields, keep going up. And why is our 10-year and our 30-year yields going up? Because of inflation that they say we don't have, and also because of the $40 trillion debt. So your dollar gets stronger, your yields get stronger or continue going up. Then your credit gets crappy. And that's the death loop that they're trying to solve right now. They definitely solved the crypto death loop, but they haven't solved the yen carry trade death loop. This is not quantitative easing, by the way. I heard Alex Jones say that. This is QE. This is not QE. So, anyway, I just wanted to kind of throw all that out there, all that data out there to you. What you do with it is up to you. But my thesis hasn't changed that there's a black swan event coming. Let me go back to get that out there. Go back to the Bitcoin. There's a black swan event coming, which will crash. You see the green and the blue, that's HYG and JNK, which will crash credit. You'll have a flash crash that'll happen because it happens every single reset. It hasn't happened yet. Okay. I'm just telling you what it. Hey, it's a thesis. It doesn't have to be factual. It's just an observation that I'm seeing. I obviously the 547 days, the nine for the resets, and the 914 days for the expansion cycles. It's right there. I'm not trying to like pull one over on you. It's probably the best chart ever. It tells you exactly what's happening here and why it's happening. That's more important. It's not because of a whale or a dolphin or a catfish or investors or it's the retail. It's the little guy moving this thing up and it's never going to stop and all the other BS responses on YouTube land. If you want truth and facts, this is the spot. This is where you come to figure out, wait a minute, is this the real deal or is this going to be the biggest fake out of all time? My money's on the biggest fake out. That's where I'm going to stand, guys. Let me know in the comments. What are you doing? Are you piling in on the top? Now, this thing could go on for a while, but like I said, the main culprit in all this is not the yields, it's not the DXY, it's not the euro, it's war, it's oil, and it's inflation. And until you solve that problem, you can throw all the money you want to try to convince Japan, who, by the way, is a very proud nation. And for them to come ask for help is a big deal. That means there was something seriously wrong that we don't know about. Oh, well, they just wanted the yen to get stronger and bring their yields down. Now, I think something seriously broke with Japan, and they had to do what they had to do. Especially with the the currency manipulator Bassett. And so we'll see. I mean, this could be a new uptrend for a while. Who knows? Who knows? All right, moving on, moving on. I saw this and I just thought it was kind of interesting. I'll share it with y'all, and then I'll leave y'all. But there was a if I can blow it up. So yeah, I'm sure everyone's seen this. You guys are really intelligent who watches the Trailer Park Traders. I just saw this for the first time, and it's kind of interesting. This guy, uh, Banner, who was a farmer, I believe, back in the 1800s, was trade or 1900s was trading like hogs and goats and whatever the hell they were trading back then, and started to see that there's a market psychology in all this because we're human. And so he created this. I think he actually wrote a book and blah blah blah. And it's interesting. And it's basically saying 2026 is going to be a good year. This is a selling year for profits essentially. And if you follow this, then this is going to align with what's happening. However, when we look at Bitcoin, once again, and kind of see what's happening over here. That let me get off of that, go back to here and go to Bitcoin. I hate, I hate, I hate this small little ass screen that I'm using here. Get off that and go to the weekly just for my trends. In 2026, early 2026, that's when your profit taking should have happened. Now we're in this reset mode right now. So he doesn't actually say when in 2026 that we're supposed to take profits, but my guesstimate was that for Bitcoin, it was a little bit prior to 2026. It was like 2025, which was the peak, which is kind of interesting because if you like actually break that out with like AI is going to say, well, this is a good year. Well, it was a good year, but then you got put into a reset. So this is kind of an interesting fact here. Doesn't mean the whole year is going to be badass. I mean, you know, it was kind of like, the bust started with 2021 with BTC. 2022, it was prior to 2023. Was the bottom in 2023? Hold on, let's take a look. 2022, 2023. 2026. So it seems pretty accurate when you're looking at just the 14. I'm using an SMA 1472 crossover. 2023, 2026. It's going to come back down and then we should have a new cycle. But 2007, so to 2016 to 2023. You can't sit here and tell me that this was a bad year. 2016 to 2023. And the top was 2020. It wasn't 2019. I'm sorry, I'm just shooting holes all through this right now. So this is a bunch of malarkey, in my opinion. If you compared it to Bitcoin, Bitcoin's top was 2021. 2022 was your sell, and 2023 was the start of a new run up, which that seems pretty accurate, 2023 to 2026. But 2019, that was a buy. and it's saying it was a peak. Years in which panics have occurred and will occur again. Well, that could be true because the panic happened in late 2019. The first reports of COVID was November of 2019. So that's plausible. But the crash didn't happen until 2022 because what happened? Credit dumped, and then who came in to save the day? The feds. That's ultimately what we're waiting for. Let me go back to showing you the HYG, JK, so you can see the historical information. I'll just do HYG. So this is COVID right here. Here's your reset. Here's your panic, which is true. And here's your dump, 2020. And then the feds came in, and here's your run up. So if you simply went off of Farmer Banner, you're going to lose money because he's saying all the way to 2023 to stay out of it. You would have lost all of this. So in reality, what's happening is when you see a spike down on HYG, not financial advice, that is pretty much a huge indicator that, hey, the credit reset. And I'm not just looking at it here in an expansion cycle, I'm looking at it here in the reset cycles. You see what I'm saying? This actual reset came late in this cycle, which is interesting, but it did reset. HYG did reset. It came here, so it can come a little late. Here it is right here, and it's coming up and it's curling over. And like I said, the whole reason Bassett's doing what he's doing is he's trying to appease Japan not to pull out of bonds. That's it. He doesn't want them to sell their $1 trillion and 30-year bonds. That's pretty much it right there. So we're buying their yen, and it's not working to make their yen stronger. And you're about to see DXY go up, which is going to hurt credit. And when credit gets hurt, Bitcoin gets hurt. Literally that simple. Here's a dump right here. Dump, up, dump, up, dump, up, dump. It doesn't follow it at all. I hear people out there right now saying that. Let's look at Tesla because I brought Tesla up. I just want to take a look at it for shits and giggles. Let's see, Tesla. Here it is. I'm on the weekly. Okay, cool. So here's the reset. Here's the boom. Here's the reset on credit. Credit's in green. HYG went up, came back down, and then it did this weird looking. You see how this Chopville right here? Look at that. And look at credit. Now let's go to Bitcoin again. I know you're going, why are we going back to crypto? Because I want you to see the exact same bullshit with its run up. You see this chop? I noticed that too. I was like, wait, why is it doing that? Well, that's because you're getting these mini flushes. See, there and there in credit. Well, what happened to DXY? Oh, funny you ask. Maybe we should bring that up. Let's go to HYG. Do I have, take that off? And there's DXY. Oh, looky there. Inverse reaction. So DXY goes up, credit crashes, DXY goes up, credit crashes, DXY goes up, credit crashes, DXY's gone up, DXY's come down, considerably, found support, and I think it's about to go up, which is going to crash credit. Credit is the candles. And this is where it started. And if you overlap, and I did this in my previous videos, if you overlap credit, HYG, the 1472 cycles I'm talking about, they align with Bitcoin. Isn't that kind of crazy when you think about it? And I just realized this, that we had a whole not a revolutionary war. What is the king and Britain and all that. They brought over all the slaves, all that bullshit. And then we had I guess it was a revolution. We revolted against the king, and I should know my history a lot better than this. But then we said "F you" to the king and queen of Europe. But 57% of their economy drives our dollar. So it kind of makes you think they're still in charge. I just I'm doing this video and I just realized that. It's kind of funny when you think about it. Oh yeah, these relationships and blah blah. Yeah, well, why why is the DXY pin 57% against your pound? How the fuck did that happen? I mean, think about it for a second. It really makes no sense. Are we really a free nation, or are we still controlled by Europe to some degree? And is it the pound or is the euro? I apologize. It's the euro. It's not the pound. It's not even Britain. It's like Estonia and Italy and whoever else is in the Europe deal. So it's not even the pound. So I don't, just don't listen to me. I don't even know what I'm talking about at this point. But I still think it's interesting that we said bye to Europe and then Europe is still 57% is controlling our dollar, which I think that's a pretty scary situation. But like I said, if you can look at what the euro's doing in comparison inversely to the DXY, you can now start to navigate to with a very high likelihood of what credit's doing. Because if the euro's going up, DXY is coming down, then you know you're going to get good credit. And boys and girls, that's what's been happening. That is what has been happening. That's why crypto has been going up and up and up. And oh, look, now we're down 1.34%. Shocker. Hmm. I actually have, let me go to credit. Credit. There it is. Oh, here it is here. Credit. Give me a second. Let me pop it up here. There it is. Okay. All right. Credit phase in and spread quality. All right. Good jazz. That's not what I want. I built all this stuff in AI, by the way, guys. Here. Here. Live credit. This is what I want to see. And there it is right there. Isn't that interesting? So here's your daily on your live credit, but your after hours, this is what's happening right now. I'm not saying sell. I'm not saying get out of crypto. I'm not saying it's done with the run. I don't know what's going to happen in the future. All I'm trying to say, there's a relationship between the euro, not the pound, DXY, and credit. And if you can look at that hierarchy, that will better explain why Bitcoin's doing what it's doing. And then if you can do the next stage of that and understand that we have 220 days left of a reset cycle that's happened 3 times prior with Bitcoin, and every single time it happens, there's a credit reset. that there's a very high likelihood that we'll have another credit reset. Not saying a black swan event, not a panic situation, but something could break, which will put a lot of stress into the markets. Well, gee, I wonder what that's going to be. War, oil, inflation. And unless that gets fixed, this is where we're at right now. We're going to keep going up and up and up on the rates and the DXY, and that's going to continue to hurt credit, which is going to hurt Bitcoin. And until that changes, there's not much we can do. All right, guys, I'm out of here. My name's Craig. All this is just my opinion. I used to be in the trailer park, and now I'm in the McMansions, and hopefully, I'll be semi-retired soon. So anyway, I've got a really interesting life. I'll do a home tour one day just to brag about my assets and my beautiful wife and my two cats and my son and my daughter that, well, my son's off to college right now. Anyway, I really am passionate about trying to understand this stuff and bring it to you guys. Doesn't mean I'm right. I've been wrong plenty of times. And also, the thesis I have, once I can validate that this is correct, and then I'll put out my second book. I've already written my first book, which is the pipe system and understanding the pipes. And I wanted to perfect it even more, so I didn't even release it. It's very interesting, though. It's fascinating. It taught me a lot, but it got me over that part where I go from understanding the system to how to trade the system. And I think that is a more important part for the second book is to align with what is happening in the markets based off of a rule-based conditional buy sell. And what I mean by that is that there's already a rule out there called the invariant rule. And a lot of times, depending on your personality on traders, let's just take George Soros, for example. He loves chaos, he loves destruction and mayhem, being a currency manipulator. And that's where he makes all his money because he's forcing the feds to come save something. And he knows that. So he'll short or long positions or whatever. I'm sure somebody out there knows a lot more and says, well, no, that's not exactly right. It probably isn't, but that's my understanding of it. My main point is whatever your personality is, it will reflect the type of trades that you're doing. And so my ultimate goal is to figure out that invariant rule to where once credit starts going, and I can tell that with OAS, by the way, once credit starts slipping, then HYGJ and K start slipping, then everything starts to line up with DXY, the euro. You can go down the list, the yields, and that's a whole separate conversation to figure out the exact um, alignment of pipes in order to see what the destruction of the markets looks like. And I have replayed that over and over and over again and have seen that with AI. AI is basically showing me all this stuff. So anyway, I think it's fascinating. And so I'll start with the first trade with TLT, then I'll go into the second trade with BTC, and then my final trade will be high beta, which most likely will be back in Dogecoin. $3,000 in 2018 or 2017 would have made you $1.1 million based off of those three trades, all the way to what, 2021 when you would have had your final sell. So that's how crazy and how much money is sitting on the sidelines with the central banks. And from what I've seen is anywhere between 24 and 34 trillion dollars on the sideline in case the system starts to crack. They can walk in and save the day. And so I think there's a little George Soros in all of us, our little Bassett in all of us. So, how can we manipulate the system to our advantage? And that's what they're trying to do right now. And it's not working. So we'll see what step two is of this. Try to save Japan from selling our bonds. I Guys, I really don't get, I don't think they give a shit about that $1 trillion. I think they're more concerned about the yin carry trade. And they can't even be honest about that because the yin carry trade is way more money than $1 trillion. So for them to cry over milk over, well, we're going to start selling your bonds to raise capital to raise the yen to lower yields. Well, good luck with that. I think the bigger concern is obviously the yen carry trade. And it has unwind in the past and has destroyed our credit markets. So there's a high likelihood that's where we may be headed now. Just my scenario, my thesis, and my thoughts on all that. So now for a second time, now I'm out of here. Y'all take care. And I appreciate y'all liking and subscribing or